Let's turn to shares of Nvidia this morning. They're turning lower. They were up in response to the quarter, but they did turn lower once the market, I think, started to really digest the potential prospects for 20% tariffs on imports from China. Here to help us break things down is D.A. Davidson, Gil Luria, and Cantor Fitzgerald's C.J. Muse. Gil has a 135 price target. He's neutral on the stock. C.J.'s at $200, and as you might imagine, given that price target, as an overweight. Gil, let's start with you. Tariffs are making you look smart right now, but I wonder, what do you take away from the quarter that didn't give you perhaps more confidence in the stock and the performance in the future?
I actually don't think this has a lot to do with tariffs. The stock was already down also after the close yesterday, because this is as good as it gets for Nvidia. Their big customers increased their spend the most into Q4 as they ever have and probably ever will. Two of their three largest customers have said CapEx will be flat into the first half of the year. It's as good as it's going to get in terms of China. Whether or not tariffs matter, there will be more restrictions on sales of chips to China, so those sales are going to be under pressure. And then it's as good as it's going to get in terms of margins. With their current accelerated product introduction cycle, every time they get to 75% gross margins, a new product's going to drag it down back to the low 70s. So they've done phenomenally well. They're still doing well this year, but this is probably as good as it's going to get.
All right, good as it's going to get, says Gil. CJ, what's your response?
Yeah, I think it's a thoughtful view, but one that I completely disagree with. We are in the first stages of the Blackwell ramp. They were able to ship $11 billion in the quarter, or 1/3 of total data center revenues. And that's the fastest ramp in the company's history. I think very importantly, they are supply constrained. I think part of the gross margin miss is the fact that they have these supply chain issues. Also, pricing from TSMC went up on Jan 1, so they have to mitigate that. But if you think about this Blackwell product cycle, I think you're going to get a July quarter where you get a re-acceleration on the top line. And then we're going to go into Blackwell Ultra in the second half. And then we're going to have Rubin very quickly in the first half of 2026. So I think the data center growth story is robust. I think gross margins will push to 75% exiting the year. And as long as they continue to deliver more and more value, drive down the cost of compute, I think that enables AI to become more ubiquitous. Data center will grow again in 26. And the moment the market has conviction on that growth in 26, stock will continue to work.
Yeah, I mean, I notice you have a $6.80 earnings target for calendar year 26, but you say, and people can back into a multiple from there. But CJ, you say as well, clear upside to $8 or more when all is said and done. What does that mean when all is said and done?
If you can get to the 300 billion kind of number for next year, that's where, we would underwrite that larger EPS number. But I think very importantly, if you believe in the 650 to 7, you're buying a stock now at less than 20 times next year's earnings, which I think is incredibly attractive. I would say, though, that the main question out there is just whether 26 will be a growth year or whether we will have a digestion year. And, I think we'll have visibility to that around the late May, June timeframe, given kind of 12+ month lead times for Blackwell. And so I think Computex Taiwan will be a very important kind of inflection point where I would expect Jensen will keynote again and that he will offer a view. And I think the moment the market kind of can underwrite another growth year is when the stock can work again. Because quite frankly, the report we got last night was basically in line with buy-side expectations. So what we want to see is that accelerating second derivative and really start to see upside to numbers. And, that's going to be the second half of 25 and into 2026.
Gil, what do you think about 26 in particular, as CJ just said? Growth year or digestion year?
It's far more likely that it's a digestion year. To get to CJ's number, you need to add $80 to $100 billion next year, with at least two of the customers already telling us they're probably at plateauing in terms of CapEx. Microsoft and Amazon have already said it. Google will probably say it by the middle of the year. So without their biggest customers increasing spend probably at all, it's very hard to see them adding $80 to $100 billion of revenue next year.
What about all the geopolitics, the fact that it's been such a sensitive sector and the Trump administration has picked up right where Biden left off in terms of restrictions and adding new ones on China? Gil, do you think that's a big problem or an overhang for the stock and part of the reason it hasn't really done much over the last 6 months?
It's a very big overhang. Jensen Huang visited the White House a couple of weeks ago, and we don't know what he promised. Usually when these CEOs have visited President Trump, they came back with a big announcement. Tim Cook with a big investment. Mark Zuckerberg added Dana White to the board. We don't know what Jensen Huang promised. We also know that there's already legislation that was coming for further restrictions on sales to China. This administration's more likely to be even more severe with those restrictions. And yet the company yesterday said their guidance and their expectations assumes no change to the regulation. So that will continue to be an overhang, at least until we know what the administration intends to do. Let's not forget, Nvidia has taken the tack that we don't know how much we sell in China. We sell to our resellers in Singapore, and we don't know what they do after that. The Biden administration said that's unacceptable. It's hard to imagine the Trump administration is going to accept that type of approach, that they don't know who resellers are selling to, and therefore it's fine to sell into China.
Guys, going to leave it there. Appreciate both your insights. Thank you.
Thank you.